Hi, this is Randy Finney with Right Side of the Chart, and this is a late session update for Thursday, August 27th, 2020. There's only about 15 minutes before the closing bell, but I don't see anything big happening between now and then, so I'm just going to get this video out, so consider it the end of day wrap. I'll just focus on the recent trade ideas. No reason to go over the broad markets. There's nothing going on in the stock market. QQQ is flat, SPY is up slightly. No technical developments there worth noting. So what I'll do is cover some of the trade ideas I've highlighted in recent weeks, and that'll be starting out with gold, silver, the US dollar. Very brief update because I already posted an update today with charts this morning. Overstock and Riot, I mentioned the other day. We have some follow through on the sell signals I was looking for there. CGA hit the stop today, broke that trendline support. I'll do a brief update there. And then various commodities that's where a lot of my focus has been recently. The best opportunities that I see, at least from a risk reward perspective. And so we'll look at the ag commodities, natural gas, and maybe a couple other things like crude oil briefly. Starting out here with gold, not a whole lot to report since the last update. On the gold daily chart, I've been hyper-focused really on those futures because I get a little more visibility going on there. But here's a downtrend line I'm going to put at this point since we had a reaction. So the story of GLD on this daily chart is you had a breakdown below the trend line here, but when you broke the trend line support, I'm talking about this uptrend line, you had the price support just below, had that gap support zone from about 179.33 give or take to 181.19, broke down, hit the support, bounced, back tested again today, rejected again today, but we're sandwiched, we're pinching between support right here and resistance, and that's that. So I'm going to add that trend line now since we got another reaction. I think I might have hand drawn that one in yesterday, but there it is now. I'll put it on my chart. And so that's a level to watch. It should be near-term bullish if gold can pop that, near-term bearish if gold can take out the recent lows, that 179-ish level. If it does pop it, where does it go? Right there would be your first resistance. Certainly there's a top of the gap right there, a big old gap and a reaction high about 189.34. Anything much more than that, it's going to be pretty bullish, I would think, from a technical perspective. The only resistance at that point is this multi-year high right here, all-time high, I believe, about what is that high at? 194.45. All right, so let's go to the 60-minute charts. Brief update there. Again, nothing major to report. I said this morning I'd like to sit back, let the bulls, the bears duke it out here, see who wins. We have gold tapping on support. This is a pretty important trend line on the 60-minute chart. Numerous reactions, and again another reaction there. So we bounced off it the other day, got checked roughly by this 1951-ish resistance, and so same story. So we're bouncing there, and which way it breaks I think is going to depend on the US dollar. So again, I posted an update today, and you can see the overhead resistance levels nearby. If we get the some upside movement here and a rejection in the US dollar, should the dollar break out, then we're likely moving down to these targets here. Get to the dollar in 1 second. Before I do that, let's just look at silver. Same thing, it's going to follow the dollar, follow gold, give or take. And we have the downtrend line right here, uptrend line right here. We're kind of pinching between the two and building energy. It's kind of like a coiled spring right here. Bullish, bearish. We do have a reaction high here to contend with and a few others there. But let's look at the US dollar because I think this is what it's going to boil down to. DX, US dollar futures. If you don't have futures, you can use UUP. You're not going to get the round-the-clock trades like you will on the futures. TC2000 and even I think freestockcharts.com, that's their free version, will give you EUR USD, real-time 24/7 quotes on that, I believe. And there's DX right here. So same level I've been watching. Downtrend line right here. 60-minute chart. Couple, meager attempts to break out, no follow through, and I've added this little minor trend line here because we have a few reactions there, and so I think a pop above that'll do the trick, get us up here to that 93, 954-ish level. Probably get a reaction there whether we do or don't. A breakout above that level, solid break, should bring us all the way up there. That would be obviously bearish for gold. rising dollar. Should we get rejected here, like I said this morning, then I'd be looking for a a divergent low. If we get a pretty impulsive rejection, probably undercut these lows, wash out some of the stops there, and then have the potential for a nice divergent low and extend this bullish falling wedge pattern right here. So I know that's a lot of lines there. I made a whole mess of it. Let me just draw it out nice and clean and simple. And again, I said this morning I'd probably put coin toss odds, so no reason, at least for me, to get aggressive right now, trying to position one way or other. Let the bulls and the bears duke it out. So, ultimately, I favor this. So it's a matter of, do we break out now, or do we break out a few days, a few weeks later here on a marginal new low? Doesn't mean we must, but that's still the way I'm leaning there. So to me, it's near term. I'm a little unsure. But intermediate term, I still think there's more downside to come in gold and more upside in the dollar. However, I do continue to remain longer term bullish on gold and silver in the metals, and longer term bearish on the dollar. When I say longer term, I'm talking months plus, 3, 6, 12 months out or more. That's longer term. Intermediate terms, next several months. Near terms, the next few days to several weeks. All depends on, of course, the time frames I'm looking at. All right, so that's that. Let's roll into the individual stocks. We had Overstock.com highlighted the other day. We had a breakdown that I pointed out, but it wasn't very impulsive. We were closed right on the trend line that day. Following day, we closed below it. We closed clearly below the trend line. I shouldn't say clearly, but we closed below it. And now today we're getting some downside traction. So there was a breakdown. And again, it was not very impulsive, but we're starting to see the impulsive selling now, and we're clearly below the trend line. So there's a sell signal right there. Actually had one last couple of days. When you zoom out, you can see those candles were a hair below. And this is still the first target here, a 84.96. And that would be, if hit, that's going to be about another 11, almost 12%. I have 11.75 the way I'm holding the lines right now. Next target after that be about 62.95. Now, this would roughly align with my outlook for gold too. More of a pullback in gold. This is what I call a Bitcoin proxy. Overstock is involved in cryptocurrency some way or another. Yeah, they still have their website. You can buy things online, kind of like an Amazon, but they do have some of their hand in that. So it tends to trade in line with Bitcoin quite often. The ebbs and flows, the bigger trends, and Bitcoin tends to be a proxy or a alternative for the U.S. dollar. At least a lot of people view it that way, thinking the dollar is going to be garbage. How's the U.S. going to pay for all this money printing they're doing? Sooner or later there'll be a day of reckoning. And so that's why, in my opinion, the backdrop for gold and silver has been so bullish in recent years, and I think will continue to be bullish. However, there's trends along the way, counter trend moves. So this again aligns with a drop in Bitcoin, which aligns with a drop in gold and silver. And I'm still right now just say targeting down there at that 42.41. Maybe more. We'll see how the charts develop. And that's 55% drop. So a lot of juice, a lot of meat left on the bone there. And Riot is another one that tends to move in line with Bitcoin. Another one of my Bitcoin proxies. Pointed that one out here, having a divergent high a little while back, and then putting in another divergent high. We had divergent high number 1 here, correction number 1, pushed up, made even bigger divergences right there, a larger negative divergence. Moved down, hit that $3 target, bounced back up to the 428 resistance level, back down close to $3 again. We take out $3 with conviction, we come back down here to 209, I believe, and maybe that 185. This is my target zone down there, 209 to 185. And of course, Bitcoin, you can look at Bitcoin futures, a symbol BRR/BRR, or GBTC. It's similar, it's a quasi ETF, similar to an ETF, closed-end fund that tracks Bitcoin, the price of Bitcoin. And there it is. You had your divergent high recently, breakdown. So it's no coincidence that Bitcoin had a bearish rising wedge pattern, negative divergence, just like it did right here. And just like you had a nice clean sell signal with a big red candle there, led to this correction, and wash, rinse, repeat. Here we are again, another breakdown. It has a pattern of rallying off these divergent lows and then correcting off the divergent highs, particularly the trend line breaks right there. So that's what we have. So we're relatively early into a sell signal in Bitcoin. I think at minimum it's coming back here to 12.19. That's my first target, and quite likely a back test. You can see here this longer term downtrend line right here, blue downtrend line, and that comes in around that 1010 support. So I could see something along these lines zigzag its way down to the trend line and intersecting 1010 support, which would give you, from where we're at now, should that be hit, about another 20%. Okay, next up, CGA. CGA did what I said it shouldn't do, or it's not going to look good. The last update was a few days ago. It was right here. I said ideally it needs to hold this 309 and trend line. It was back testing. It was at dual support levels. Downtrend line resistance after the breakout, plus price resistance 309. It had been holding it for several days. And I said that's going to be no bueno if that gets taken out, and it was. And when it got taken out, I said worst case scenario, absolutely what you don't want to see is a break below this uptrend line. That happened today as well. And it wasn't a gap down. There was plenty of time to get out. I had a pretty liberal stop in case we had a whipsaw signal, but that one stop is hit. So again, when it gave up 309, that was it. You can see it started out today at some point up here, and took out, then after 309 went, the stops just started getting hit, took out the trend line, more stops got hit, and that's it. So we'll keep an eye on it. It still has support if you're in it and you're giving it room, or you're looking to enter. Maybe you didn't before, you wanted to see a pullback a little bit more. 241 is pretty big support right there. You can see all the reactions along there. That would be objective if you get anywhere close to that level to step in with a stop somewhat below. But we're just not seeing the broad-based momentum. We're not seeing enough of these break out. And I did mention in one of the very recent videos, I didn't get to cover the basic materials, but I told you guys I did a video on the building material stocks saying that they were set up, and quite a few are still set up. Some have already broken down. Well, building materials is a subsector of the basic materials sector. These agricultural input stocks are also a subsector of the basic materials, or an industry, within that sector, within that industry, or industry with that sector. See, basic materials. And so basic materials chart looks weak too, and that's why I started to become a little bit more lukewarm on these recently, and we'll keep an eye on them. I won't do many updates because it's been stopped out, but if I see anything notable, either bullish or bearish, I'll let you know. All right, on to what is working right now, or the commodity trades. I'm just going to rifle through my commodities watch list in no particular order. I'll talk fast. I'll highlight which ones are some of my favorites, which at least at this point in time. But again, I've made it very clear for many months now, I personally like to take a shotgun approach, spread it around, have a little of each, sometimes overweight, and I also like to tactically enter and exit. And what does that mean? If I'm trend trading a position, that's what I'm doing. This is where the bulk of my money in my portfolio is lately is in commodities. It's tactical management of that position will be, you might have a core position and just say cotton. I'm just picking this one for example. It's not even one of my favorites, but it's certainly in a nice uptrend. Tactical means you may take some profits when it runs up to resistance, or if you get some divergences at resistance. Like right now, there are some negative divergences at resistance. It's a good example. So you don't want to add right now. If anything, maybe book some profits or tighten stops. But what you do want to add are pullbacks to the trend line. Now you might not buy a pullback to this trend line because at this point in time we have negative divergence. Cotton's run up from the lows about 36% since early April. So again, it's at one of my price targets right now, resistance level there, 39.26. So that's that. So it's one, again, it's in an uptrend. Longer term outlook still looks pretty good on a lot of these. I'm viewing these as potential bottoming plays. So, I may personally kind of ebb and flow, have a core position, but then lighten up on some when they, like I say, when they hit resistance. Or very often what I'll do on a security that I think has a lot more to go is just raise stops and let it run. Trail stops, give it fairly wide stops, and let the position run over time and ride out the counter trend trades. All depends on how actively I'm trading at the time, which is not very much right now. SSG, sugar. There's sugar. Still, nice run off the bottom so far. Sugar's up 42%, and that's since late April there. And the bigger picture here is we have this divergence as well. You have this little wedge type pattern, negative divergence. And so here's one again that I am longer term bullish on, but near term looking for a pullback maybe to this 37 to 34 target. In other words, I wouldn't be adding right here. Okay, looks like I missed the pause button. I believe the last thing I covered was cow. If I didn't, then I'll have to put a post of that chart below. I started UNG and it looks like I didn't resume the video. I was just checking on the next thing on my watch list. So we're going to pick it up here on UNG. Natural gas, just been a great trade recently. The last objective long entry was highlighted right here. Natural gas is up from this point in late June. It's already up about what I think 60 something percent. Let me grab the measuring tool, and that in 2 months we're up about 64%. And again, back here was highlighted as an objective long entry based on both the 60-minute charts and this daily chart. We were using the futures 60-minute chart. We broke out, back tested right there, and just in 1 month there's about a 53 or so percent gain right there. And we're getting close now to my $15, $15.07. We'll call it $15 target. We're at $14.50 today, so not a lot of meat on the bone. Not one I'd be chasing at this point. If you're still in it, might as well trail up stops, raise stops to protect profits at this point. Odds favor a pullback if and when that 15-ish level is hit, and then I might look to re-enter back here around 13.10 or so if I take full or partial profits there. I'm trading the futures, but they're coming up on resistance too. 1775. If nat gas, and sometimes when it wants to run, it can continue to run. So if it can pop right on through the 15.10-ish level, then the next stop up here is about 1775, and that's a pretty decent resistance. And then ultimately up here around 22.23 is the next resistance zone there on UNG. So nat gas doing well. A lot of these guys are. PALL, palladium, like gold and silver. I'm thinking it's due for a correction. This one will probably lead the way down. I think the palladium's gotten much more ahead of itself than gold. There was a shortage a while back, but the demand was being kept up by the auto industry, and economic indicators on the stock market and economy are diverging. If the automakers aren't pumping out as many cars as they were before, you're going to see falling demand for palladium because it's used in emission controls. And plus, more importantly, there's that nice trend line. So there it is. That gets taken out. You have support around 192.86 or so. Next stop there is about 171 all the way down there if that sell signal triggered. Just like gold and silver, if they can pop and the dollar starts another leg down, you have this little triangle pattern. Palladium could pop that and run to the upside. So I'm leaning this way, but again, let's let the bulls and bears duke it out with silver, gold, and the US dollar, and we should know soon which way the next trend is going to be there. All right, I already covered UNG, USO, crude oil. This is crude oil, ETN, USO. I'll turn off all the lines. It's just flat line, so that's why you haven't seen a lot of updates from me. Really not much to report there. UGA is the unleaded gasoline ETF. So if it gives you any heads up to where, or could give you a heads up to where oil is going, because they usually move together. So I have a pretty clean trend line. There's a little wedge pattern there, negative divergence building right there, uptrend line, and some price support. It's not a hard support line at 1928 because there's a few reactions below it, but I think that does a trick to bring us down to these targets. So I think natural gasoline, I should say, is looking precarious right now. SOYB, interesting development today. That's why I'm doing this video, to cover a lot of these ag commodities. There's quite a few that I've been watching. This is one of them. SOYB is a soybeans ETN, and we took out, there's a downtrend line I've been waiting to take out for the next buy signal. That's come. We maybe, so far it looks like we might be able to burn through this divergence. Yeah, any more upside and it'll burn through the divergence. But you can see, again, another one since April right here on that divergent low. Soybeans have rallied about 13.5%. The last of, well, not the last, but one of the early objective long entries I pointed out at the time was a breakout right here. This downtrend line formed this bigger wedge pattern. Boom, there was your objective entry, and then I've highlighted all along as objective re-entries or add-ons on pullbacks to this uptrend line right here. So we remain above the uptrend line, and today we're not too far above it to say we've safely taken it out, but you have that 1485 resistance slash target, which has now been hit, and the downtrend line as well. So if we can continue to build on these gains, if we can put that 1485 level clearly in the rearview mirror, I don't see a lot stopping soybeans until this $16 level right here. So and I think it will get there. It's just a matter, are we going to come back in and maybe check this trend line again? So if we do, and you're looking to get on board, this rally in the commodities, it'd be a pretty healthy pullback, but it'd be normal to come back in and test that same trend line, and then maybe have an objective entry there with a stop somewhat below for a swing up to that $16 target right there. JJG, this one I said is convenient for those that don't have the time or the effort, inclination I should say, to manage multiple positions, and you like the grains, corn, soybeans, and wheat. So this ETF or ETN has all three in one. Had an objective breakout right there, that bullish falling wedge pattern, just like you had one here, just like you had one here. Watch, rinse, repeat. This was the rally that followed. That was the rally that followed then. And we had this breakout, and it was also pointed out here, an objective entry or add-on here on the back test, and from there, in just a matter of a few weeks here, we've rallied about 10%. And more importantly, we've taken out that 4160 was my first target here, was already hit. That's common. Once the target's been hit once, the next time you visit, you ultimately take it out. I always just look for the reaction on the initial tag normally. That's what we had. So breakout, target hit, pull back, objective long entry, recycle back in. 41.6 has been taken out, so as of today, this is an objective long entry or add-on again for a move up here to 43.50, and ultimately this target zone, quite possibly more. I'll take a look at the longer term charts as and if we start to approach there, but that's about $46 or so, and that would give us an additional 9-10% on JJG. Wheat, this is I guess still an active trade. Yeah, active, official. Again, official, unofficial. It's just a matter of me getting out and marking all these targets, doing the price adjustments, meaning T3 is 574. The resistance is probably a little bit above that. The story of this one, I can't even remember now where we entered it, but it's just been this thing is just a money printing machine. You just buy it here at 490. Pull back to that support. I guess that was the last entry somewhere in there, and that's it. So we hit T1 back here, we hit T2 here, we had a reaction off T2, pull back, and we're back to it right now. So we've already been checked on that level once, so whether we have another reaction or not, I favor a breakout through there and up to this next target, T3 at 574, and then T4 at 591. That's going to be a big level if and when it gets there, because what I'll do at that point, we're going to zoom out on the chart here and paint the bigger picture, which says, here's what could be a big old basing pattern in wheat right here, multi-year, nearly 2-year basing pattern. So if we can get a breakout above that level, an impulsive, convincing breakout, boom, we may be in the early stages of a new bull market, the end of a bear market. And this was all bear market coming into here, and wheat and a lot of these commodities. So so far so good. Work to be done for the longer term case, but near term and intermediate term, I still like this. And I think it can hit that target in relatively short order. That's the thing about these commodities. They're very trendy. You're meaning you get in an uptrend, you're in a downtrend, you're in an uptrend. They do have some sideways trading periods at times, but as you can see, they have a lot of these what I call unidirectional rips and dips. So don't be surprised just how quick we can get up here if we continue to see this upside momentum, which right now I think we will. Corn has been one of my favorite just in recent weeks because it was a lagger before, and with soybeans and wheat running, I said that's not going to happen for much longer. Corn usually trades in line or roughly with wheat, and there are alternative or competing grains, and similar climate conditions and all that they're grown in. So There it is, some little basing pattern on corn. Right here was a divergent low, objective long entry right here at that 1185 level, and just in a matter of a couple weeks here, we've rallied about 10%. Coming up to this 1279 target, and if and when that breaks out, I think it's a quick ride up to 12 T2 here about 1422, and then maybe some of those other targets. But I would certainly expect a reaction there. I put pretty good odds. Again, first things first, we need to pop 1280 with conviction, and then that would be, if we get it, that's going to be another 12.5% in corn. JO coffee doing its thing as coffee does. This one's up off this divergent low right here. It's rallied already about 33% at this point in time. What it looks like is we had a downtrend line, little wedge pattern, breakout, and then we had this smaller wedge. That's where we entered that last trade on coffee. Hit T1, hit T2. I never got around to adding T3, making it official, but it's still my next target right there. And so I think we're headed up there. And again, like everything else on these commodities, well, that one doesn't have the history because they changed it. Joe has been trading for a long time, but this company, iPath, took a lot of these ETNs, the agricultural ETNs, and they stopped offering the old version, which is now JJOFF or something along those lines, and that one's trading over the counter now, and that's why you're not seeing the price history here. But if you go on the site, go back years, you'll see trades on Joe. And then let me find it for you here. It's JJOFF. Here it is. I'll show you right there. So it's still trading out there, but you have less volume and liquidity in this, and that's why I'm focused on Joe. But this one, you can go back here and you can see all these trades. You know, these are things we've traded in the past. Look for these divergent lows and divergent highs and things like that, and call them the major inflection points. But these things trade so well to the technicals. You know, the stock market right now, I've cut back on my analysis, my trades, because the main thing driving the stock market is Fed liquidity. These guys are still, well, technical analysis, at least my style of technical analysis, is still working very well with these. You don't have the Fed heavily, manipulating or intervening in the markets here. They're intervening very heavily in the bond markets, corporate bonds, treasury bonds, everything like that, and indirectly into the stock market too by gunning it with liquidity. So like I said, I just like to stay around and play with what I'm comfortable with, and that's these guys right now. And that's, again, longer term picture there. Okay, back to where we were. We're almost done. NIB, Cocoa. NIB offered a beautiful objective long entry right here recently at the trend line support with the divergent low. That was highlighted at the time, and that was just what was that, not even just a couple months ago, early July, and we've already rallied about 25%. Recently I pointed out this bear flag, potential bull flag, I'm sorry, continuation pattern, and looks like we broke out, and I like what I see. Nothing but green candles so far, and that's what you want to see. You have an impulsive move up followed by a period of consolidation, takes from a flag, followed by an impulsive breakout, and that should take us up right to around my next target there, about 34.90. However, we're right now today, we kissed my 31.12 target, so that's resistance. The high was 31.13, close enough for government work. It was 1 penny shy there. So we could have a reaction here. Odds favor it. But on the flip side, mixed, because we just broke out of a bull flag, and we may see continued impulsive buying. That's typical after breaking above a bull flag. So I'm sitting tight with this one. I don't care if we pull back, that's fine. I'd rather just ride out any near-term pullbacks and go for, shoot for that 34.90 target, and then maybe think about either booking profits or tightening up stops. That's about another 12.5%, and that's NIB, Cocoa, ETN. That's just the other chart I was showing before, but it has a lot of lines, kind of busy, so I kind of toggled over to this board. It's a little more clean. I think last one, and this is for the ultimate armchair investor. Again, I just spent a bunch of time covering all these individual commodities. Your head might be spinning. How do you keep up with that? And I said, if you like the agricultural commodities, now you're not going to have natural gas, oil, industrial metals, but just the ag commodities, this is your ETF, or one of them, but one I like, DBA. You've got live cattle, soybeans, sugar, corn, cocoa, wheat, coffee, hogs, feeder cattle, and cotton. Pretty much everything I just covered. Nice breakout above that pacing pattern there. And that was, first of all, we had a break above this bullish falling wedge right there with positive divergence. We went sideways for a while, put in another divergent low right here, then broke out, mentioned that as an objective long entry. We pulled back to back test, I mentioned that as an objective long entry. And so we're walking up this trend line right now. So since the back test alone and the breakout, not even counting that divergent low, just a couple weeks ago, we're up about nothing big, 5%. But remember, this is diversified. You're going to have things like that hogs and cattle might hold it back a little bit when the grains are rallying, and vice versa. Maybe the grains have a correction and then the hogs and cattle rally, or some other things. So remember, anytime you're trading or investing, the more diversified you are, the more it's going to hold your returns back. One example is if you invest in the S&P 500 or SPY, you're going to underperform QQQ in a bull market typically, but you'll outperform it in a bear market. It tends to fall less because S&P 500 contains 500 companies, and they're diversified among 11 sectors, much more balance in there than the tech-heavy QQQ, which is 50+% technology stocks. And even those that technically aren't considered tech stocks anymore, like Facebook and Alphabet and Amazon, they're all in different sectors, but they're the big tech giants anyway. So really, QQQ is just it's a tech fund, in my opinion, for the most part. But the point I was trying to make is, that diversification, it tends to protect you when things start to go against you, or some of the positions go against you because you have others in there holding it up. But it also dilutes your performance, and that's why I do these videos and highlight which individual commodities at any given point in time look the best, have the best potential, or offering objective entries. So if you got a little extra time, a little extra effort, you can outperform the commodity ETFs or the commodity mutual funds by cherry picking which commodities you own at which time. And that's it. Those are the things I'm watching. We'll wrap it up here and pick it up tomorrow. This has been Randy Finney with Right Side of the Chart. Have a great day.